What a pleasure it is to be introduced by the troublemaker in chief. Martin Eakes, I have valued your friendship and your dogged determination over the years. I'm grateful for that introduction. And I'm also grateful to be in a room with so many people who are dedicated to helping those who are less fortunate, those who are having to struggle making ends meet, who are striving to own a home, but who are having a difficult time. A number of those people are here. I see Andrea Harris, who's sitting there, and Wib Gully, and Mike Calhoun, and Chris Kukla, and of course Martin and Josh Stein, who worked years with me in the Attorney General's office, and Joel Flashman. I'm so grateful for your incredible leadership. As I stand here, I looked at the Sanford School of Public Policy sign in front of this podium, and I thought about North Carolina and the kind of state we have been over the last 50 years. And I think about Terry Sanford and race and courage, and think about him making a speech in Chapel Hill, North Carolina in 1963 on the anniversary of the Emancipation Proclamation. And in 1963, Governor Terry Sanford was talking about racial tolerance, racial equality. And no other Southern governor had set out with such clarity where he wanted his state to go. And as a result, I think over the last 50 years, North Carolina has been a special place in the South. We are facing significant obstacles to that now, but we can talk about that in another venue. But I'm here tonight to talk about money, and to talk about lending, and to talk about people who are struggling. It's tough out there right now on families with low to moderate incomes. Many have dreamed of owning a home, and because of a lot of work that has been done here, many people have succeeded in getting that home. But many saw that dream evaporate because of the high cost of borrowing money. And many of those same people are simply struggling to make ends meet. Even beyond the cost of home ownership, the cost of borrowing money for low to moderate income people is high. And there are so many ways that people can be ripped off, from payday loans to debt foreclosure scams to high-priced auto loans to unsecured small consumer loans. And these same people who suffer from these products have also struggled to have a voice in decision-making, to have some say-so in the cost of the money that they borrow and the issues that affect their everyday life. And one of the reasons I'm here today is to salute those who have been the voice for these people. People at Self-Help, people at the Center for Responsible Lending, and many people in this room who continue to be the voice for those who are struggling. I am proud of North Carolina's track record, and I want to talk about that for a minute, but also in a minute want to talk about the many obstacles and challenges that we still face. But over the last couple of decades, North Carolina has been a shining beacon in the area of lending. And we've done that when North Carolina is the second largest banking state in the country. About 150,000 banking jobs in North Carolina. But at the same time, we have had some of the toughest lending laws in the country, and we have been a leader in that effort. Well, how did we get here? First, we had the foresight to enact laws that encouraged interstate banking and brought banks here, which was a positive thing for North Carolina. Many jobs were created, and we've been the home of the strongest and largest banks in the country. At the same time, we work with these banks to maintain control over interest rates and costs of money to protect consumers. Sometimes that took pushing, cajoling, and even shaming, which works oftentimes. Shame is a great motivator for people. And I'll credit many in the banking industry for listening and many times responding. But I think Martin, in his introduction, gave a quick overview of the 1999 introduction of predatory lending law, anti-predatory lending law, and the 2010 adoption of anti-predatory lending laws across the country. What battles there were, particularly in 1999, when I first met this guy with white hair and a red face who came in, and we talked about seeing the high-priced mortgage lending. We talked about the kind of high-priced home loans that we were seeing, particularly in the subprime market. The upfront costs were extremely high. Single premium credit insurance was being charged to people, along with high interest rates, and all of that upfront money was also being folded in and financed along with the principal at very high interest rates. There was a lot of flipping of loans to continue to churn these high fees, and there were even prepayment penalties. If you paid off your loan early, you had to pay a penalty. And we know the story about the bus driver in Durham who was making $8.65 an hour, and he borrowed money to consolidate some credit card debt, and he took out a $43,000 loan on his house and paid every single month for a decade, and at the end of that time, he had paid down on his principal $165 out of that $43,000 because he was paying for all of those upfront costs. So many of us agreed that in 1999 we had to do something, but the question was what and how far we were going to go. I do commend banks and credit unions and others who came to the table and talked about this issue, and eventually we got to a point where we passed a strong law. But there were a lot of problems to get there. Martin and many others had been negotiating on a deal, and we had what we thought was a deal, and I introduced the legislation, and we had a lot of co-sponsors, and all of a sudden we didn't have a deal. And all of a sudden the banks didn't want to do certain things in the legislation, and then they tried to get me to introduce a blank piece of legislation, and I didn't do it. And I introduced what was agreed to, I believe, at the beginning, and I ended up being the only sponsor of the legislation. But we worked, and we worked, and many people in this room work, and there were many times when Martin and I had meetings as I would go back into the negotiating room, and a lot of it involved not quite screaming, but a red face with white hair and pounding on the table. Had a lot of that. And we just can't do that. We just can't do that. But we got there. And we prohibited that upfront single premium credit insurance that many people said we couldn't do without, when in fact we completely eliminated it and people realized what a bad thing it was, and then people stopped doing it. They just stopped doing it because they were ashamed. And we cut out the flipping of the loans and the prepayment penalties, and we limited the upfront costs and fees, and we became an example to the country, and other states began to do it, and eventually it spread across the country. But in 2001, we also had to continue to fight with mortgage brokers who came on the scene, who were going to put these lenders and borrowers together and end up putting a whole lot of money in their pocket. Some of them did a good job. Others were felons. Others were liars. Others played both sides. And we pushed legislation that required them to register so we could keep up with them, to get education We're making them have financial requirements. We imposed duties on them and prohibited a number of their practices, once again, making it fairer to lenders. I had become Attorney General by 2001, and with the help of many of you, we were able to take the associates to court in 2001 and get money back for North Carolinians. I worked with attorneys general across the country going after household finance and AmeriQuest, and we were able to use this law as an example of what was unfair, and we were able to get money back for consumers, and we were able to change the way people viewed home loans. But in the year 2000, President Bush was elected, and during the next 8 years, state attorneys general across the country and banking commissioners not only had to fight the bad lenders, but we had to fight the federal government. Because, you see, they began to argue that federal law preempted our state laws that we had put in place. And so we had to battle that issue. In 2003, I visited the office of the Comptroller of the Currency and said to Mr. Hawke at the time, look, we are seeing loans out there that people simply are not going to be able to pay back. They are too burdensome. The home values simply are not going to cover it. And they continued to say, this is our job. This is the federal government. You guys shouldn't have anything to do with it. They essentially wanted to take 50 cops off the beat, 50 attorneys general and banking commissioners from across the state. They wanted us to stop doing our job. We fought that, along with people of the Center for Responsible Lending and Self-Help. I testified at the United States Senate Banking Committee, and we fought them in court, and eventually we were able to prevail. And in 2007, we updated our anti-predatory lending laws because we continued to see problems occur. We prohibited all the prepayment penalties on subprime loans. We required the lender to document the borrower's income. We were seeing these things that eventually caused significant problems in 2008. We required the lender to verify the borrower's ability to repay, even after the interest rate increased on an adjustable rate loan. And we required that broker's commission to be figured into the upfront cost, limiting, again, what could be charged to the borrower. But then we know what happened. In 2008, the bottom fell out. They had packaged these loans and had sold them across the country. And we saw significant foreclosures, and we saw banks ignore mortgage foreclosure laws, and we saw robo-signing. And so I worked with attorneys general across the country, and again, our friends at the Center for Responsible Lending and Self-Help helped us, and we were able to negotiate significant changes in the way that lenders serviced these loans and conducted foreclosures. And in 2010 and 11, I became president of the National Association of Attorneys General and decided that my theme for the year after this downfall and in the reconstruction was to make sure we looked after the consumer, making sure that we paid attention as we tried to reconstruct. And so we did do that, and I had a conference in Charlotte where I called Elizabeth Warren, and she and I had developed a good relationship. She came, as well as Brian Moynihan from Bank of America. He came. And we had a significant discussion about the future of our country and the future of our financial stability. And a lot of that work helped us to form the Consumer Financial Protection Bureau and the passage of Dodd-Frank. And there were many protections put in place for consumers. But consumer money was not just a problem with home loans, far from it. In fact, the consumers who can't even afford loans are sometimes the hardest hit. I live in Raleigh, and I look at the incredible wealth and vitality of that city and what is happening. condo complex, an apartment complex almost on every block. Do you know that in the city of Raleigh, there is a 14% poverty level? 14% of the people of Raleigh, North Carolina live in poverty. 16% of people in Charlotte live in poverty. We have to make sure that there are protections for people to be able to get out of this. You know, it starts with education, and we can go down that road too about investing in public education and preschool and making sure that people have ladders of opportunities. But we also have to concentrate on protecting people from these unfair loans. Martin mentioned payday loans. The advertising was relentless. Everybody needed a little more money at the end of the month. And so these loans became prevalent. But a payday loan was like a person needing a life preserver and being thrown an anvil. When you have a loan that goes anywhere from 200 to 500% APR, and people having to pay it back in the next paycheck and getting caught in the vicious cycle, I talked to victim after victim. Well, North Carolina, once again, was a shining star in payday lending. We made a mistake, and we authorized it in 1997, but at least we were smart enough to sunset it in 2001. And there was a big fight to keep it going, that our military needed these small loans. Right. We were smart enough not to reauthorize payday lending. But they continued to say, well, we can do this. And we said, I was Attorney General at this time in 2001, we said, no, you can't. There's a limit on what you can charge in interest in North Carolina. So they went into the bag of tricks. They first tried to argue that they would set up with an interstate bank, a federally chartered bank, and so you can't touch us. We fought that and we won. They said, okay, we're going to set up with a state charter in another state. You can't touch us. We fought that and we won. They said, okay, we're going to set up these little shops down the street where you come in and you rent internet service time. You can go on the internet. Disguised payday loan. We fought that and we won. Now, they're using the internet and even have started using Native American tribes to hide and continue to lend money to people. In North Carolina, we have fought them every step of the way, and we've succeeded. We had a bank, state chartered bank in Alabama, who had no bricks and mortar in North Carolina, who started lending to people online in North Carolina with payday loans. And they said, you can't touch us because we don't have any bricks and mortar in North Carolina. Well, this is where shame comes in. And we were able to talk about this publicly, that this bank in Alabama was using payday loans to lend to North Carolina consumers, and they stopped. And now we're fighting another company that's trying to use a Native American tribe, and we're going to get them to stop too, and we're going to continue to fight those loans in North Carolina because almost any other alternative is better for people than a payday loan. We've dealt with debt settlement scams. You've seen the ads. We can help you get out of debt. All you got to do is call this 800 number, or we can stop that foreclosure. We can help you. I talked to a woman named Shirley Bledsoe who heard this ad. She was a teacher. Her husband was disabled. He was earning about half the amount. She was having trouble making her mortgage payment. She'd heard it on a Christian radio station about this company that she could call. And what she was told is, you need to stop paying your mortgage. And you need to save up and you need to pay us several $1,000s and we'll take care of everything for you. Of course, they didn't do anything. And what we did with Josh Stein's leadership in North Carolina and mine and others, we said, this is so bad, this is such a prevalent practice that anybody who is going to help someone to negotiate debts or to help with foreclosure is prohibited from charging an upfront fee. And what that did for me as Attorney General, I don't have to prove whether they're doing a good job. All I have to prove is that they took somebody's money. Because what they would often do is send the lenders a letter and say, hey, we'd like to negotiate you, and then you get into whether they've done a good job, but most of them didn't do anything. But what we've been able to do is to go into court time after time after time and show that they have taken money up front, and we have been able to close down numerous debt settlement and foreclosure settlement scams, I call them, and that's what they are. Now, they've tried different things to hide behind. They've tried to hide behind. They said, no, we're a law firm. No, well, no, you're not. You're a debt settlement firm. And that practice, North Carolina was a leader once again. States began passing that law, and finally the Federal Trade Commission adopted nationally. We're seeing more issues with debt collectors and debt buyers. One of the things that really made me mad one day is reading about people who had been involved in Countrywide. Now, we took them to court as well, and were able to, about Countrywide and the problems that they caused out there. And they caused a lot of debt. Well, some of the executives from Countrywide got together and formed a debt buying company. They bought the debt that they helped create and then sued people for that debt, buying it pennies on the dollar and then suing people. In North Carolina, once again, we were a leader. We said that if you buy debt, you got to do certain things before you sue somebody, because what we were beginning to see was they didn't even have the right people sometimes, and they didn't have the right amounts, and they really didn't know how much the debt was. All they knew is that they purchased a bunch of these debts and they were going to start suing people. Well, in North Carolina, you have to know what the debt is. You have to be able to document it, and you also have to be able to say that you are bringing it within the statute of limitations, because a lot of this debt is really old. And consequently, these lawsuits have plummeted in North Carolina, and the new Consumer Financial Protection Bureau has made this a priority. And I think that that's critically important. We have a lot of challenges ahead, and thank you for this time of letting me recap and talk with people I know are committed to fight for consumers. But there's a lot still going on out there, and we cannot rest. We now are seeing people trying to take advantage with pension advances. They're using people who may have a pension or disability payment. They're coming in and buying that, so to speak. We believe that it is a loan, and so we have some investigations in place. We're seeing a significant increase in subprime auto loans. Some of the same problems that we saw with the subprime mortgages are beginning to happen with subprime auto loans, and some of these are being packaged and sold as securities. We've got to fight that battle. In the area of consumer lending, North Carolina is beginning to lose its luster as a leader in protecting consumers, in that there was an increase passed by the legislature over our objection for small loans in North Carolina. I haven't seen the interest rates going up significantly over the last few years, but they needed increased interest. So this legislature and this governor signed legislation that allowed them to charge consumers more on small loans. Our military has often been targeted because they have a steady paycheck. Many of them are away from home for the first time and are somewhat unsophisticated with finances, and they are targets for scam artists. I've even dedicated somebody in consumer protection to help protect military people. We are now investigating a number of these for-profit colleges, and we are looking at Sallie Mae and the servicing of student loans. Martin mentioned that. There is a significant amount of student debt out there right now that's going to be causing more and more problems as we go along. We have to get a handle on that. And we have to continue to be vigilant in fighting payday loans in North Carolina. We've got to remember that we have a responsibility to help our fellow man. And I believe that we can pull together and do this. We do have to invest in our public schools. We do have to provide ladders of opportunity, but we can provide basic protections for those who are having to borrow money to keep it going, or to buy a house, or to make investments. And I'm glad you're here, and I'm glad you're going to continue to fight every single day with me, and it's an honor to be here with you tonight. Thanks very much.